What's up, everyone? Today we are going to explore how your investment grew if you were lucky enough to buy $1,000 worth of Amazon stock at the time of its initial public offering in 1997. Amazon stockholders who bought in 1997 have 10x their investment not one but 150 times. But before we continue, please hit the like button and subscribe for extra karma points. But first, let's hear from Jeff Bezos himself about the origins of his company.
Well, 3 years ago, I was in New York City working for a quantitative hedge fund when I came across the startling statistic that web usage was growing at 2,300% a year. So I decided I would try and find a business plan that made sense in the context of that growth. And I picked books as the first best product to sell online, making a list of like 20 different products that you might be able to sell. Books were great as the first best because books are incredibly unusual in one respect, and that is that there are more items in the book category than there are items in any other category by far.
The evolution of the Amazon stock price can be divided into 3 periods. The first bubble can be summarized by bubble curves. The first years are marked by a huge rise in price. As the internet company Amazon got caught up in the dot-com bubble, the market as a whole inflated because of unrealistic valuation of companies that surfed the wave of the internet. At its peak, the company would have brought 60 times the capital gains in just 2 years compared to the Standards & Poor's index. This high valuation started to drop in the run-up to the millennium because the public feared that digital progress would come to a halt with the millennial bug. Old and even recent computer systems were expected to crash because of the bug on how internal sighting dates were represented. As soon as the risky bug was mitigated, the stock price rose again. However, this was not enough to keep the bubble inflated. The dot-com bubble burst in the beginning of the year 2000 when the market started to realize its overvaluation and the fact that not every web company would become a great success. Amazon, however, due to its customer-centric approach, was one of the few that would survive the bubble. Luckily for the Amazon stockholder, Amazon would have yielded twice the amount of capital gains as the Standards & Poor's index. It must, however, have been very difficult to hold on to the stock. Let us know in the comments if you were one of the unlucky ones that sold at that point in time. After the bubble, Amazon dropped to a more realistic valuation. The company started to expand horizontally by extending their online offerings from books and music to a wide range of other products. Amazon started to expand its reach and customer base. To do this, Amazon would need to build out and excel in IT and logistics infrastructure, learnings that would be the key drivers of the growth seen after the second period. Let's hear from Mister Bezos on where Amazon is now so we can explain why Amazon grew in the last decade to the massive valuation it is at now.
What is Amazon? We do such a diverse array of things, from producing original content in Amazon Studios to Amazon Web Services, where we sell, startups and enterprises, computing infrastructure, to the things that most people know about, which is our consumer offering, where we deliver things in little brown boxes.
From 2006 on, Amazon took key components of its own IT infrastructure and started to offer them to the public in the form of web services. They leveraged their learnings on scalability and performance so every company or startup could use IT components Amazon built for a fee. They went so far that almost every imaginable IT process can run on their service. The wide array of services, scalability, and great support made them grow to the largest cloud provider, surpassing Microsoft, IBM, and Google in terms of revenue from web services. What began as an online store is now the engine that powers most of the web today. Amazon also expanded in other verticals such as Amazon Prime for video and audio on demand, and even started to open physical stores in the US after taking over Whole Foods. The company is also expanding globally and has become one of the highest valued companies on the globe. Turning $1,000 in 1.4 million is a great achievement. The question now is, were all investors convinced from the beginning?
When I raised money for Amazon, I had to raise $1 million, which I raised from 22 different investors, $50,000 each. They got 20% of the company for the $1 million. And it was 40 people told me no. So I had to take 60 meetings to get 20 yeses. The first question was always, what's the internet? And I had to walk through that. And this was 1994, early 95. And so did I anticipate, fast forward to today and the current version of it? No.
Comparing Amazon to the Standards & Poor's index, we miss the fact that the index also produces dividends. These dividends are usually reinvested by the investor. Since Amazon reinvests its yield and doesn't pay out dividend, it uses that capital to fuel its own growth. I think that's a great idea as long as they have markets to expand to. If we compare the Standard & Poor's index with dividends reinvested, the portfolio value would still be way below the valuation of the Amazon stock. In order to end up with the same portfolio value, an investor would need to add on $1,800 to the portfolio each month. That equates to almost $500,000 in contributions. At the end, still a great portfolio, but a lot more effort than making a lucky stock pick in 1997. On the other hand, you don't need one lucky shot to ride the capital gains of the Standard & Poor's index. Are you holding Amazon? Please share in our comments where you see Amazon go in the next decade. Thanks again for liking and subscribing for some investing karma.